Welcome to the Stacked Investing Podcast, where real estate meets real life. I'm your host, Greg Farricielli, bringing you the latest in investment, health, and mindset. Stay stacked. Welcome to the Stacked Investing Podcast. Today we have a super special guest from Nashville. His name is Brian Heller. Brian has been in the real estate game now for looks like seemingly a decade or so. He's got multiple full circle deals. He does mostly capital raising and apartment syndication. Brian, welcome.
Great to be here, Greg. Thanks for having me today.
Yeah. So tell me a little bit about your apartment syndication, how you got into that and what your current model is.
Yeah, absolutely. So a little over, surprisingly, it's been 13 years now. I started out in Los Angeles in real estate, sort of at the bottom of the last cycle, March of 2010, probably one of the worst times to be starting out in the industry as an apartment broker in the Los Angeles market, where I worked there for about 8 years, doing around 200 million in transactions for my clients and focusing mostly on properties, call it 4 to 100 units. As you can imagine, a 100-unit building in Los Angeles is getting clearly into the institutional level space, even 10 plus years ago. So since doing that, in addition to the brokerage side of things, one of my clients had a 30-unit building off the Sunset Strip, and so I was able to get some invaluable experience working for them as an on-site manager. I'm not sure if you're aware, because Tennessee doesn't have a law like this at all, but in California, if you have a building of 16 units or more, you need to have an on-site manager. So my wife and I lived there, had discounted rent, and were able to really help out and see some really cool things, everything from obviously collecting rents, but managing the day-to-day operations of the building, dealing with the tenants, helping management with the unit terms and unit turns and leasing and things like that. And so really great opportunity there to see sort of that side, the asset management kind of side and property management side of the business. From there, though, after helping my clients and seeing what they were able to do on the principal side of things, it was very obvious and advantageous for me that I wanted to take the skills that I had learned from being a broker and helping people to understand what the business plan should look like for a property to then go and ultimately do it myself. And so I was fortunate to find a really great property here in Gallatin, Tennessee, which is a suburb just outside of Nashville. Probably B plus class suburb. Facebook's about to put a data plant out there, and there's a local community college, and it's just growing like gangbusters, as all of Nashville is, right? 100 plus people a day are moving here still, which is crazy. It felt like it was dropping, and then another article just came out, kind of reaffirming that. So But yeah, so ultimately went full cycle on that deal from 2019 to 2022, and have continued to look to source opportunities. 2023 was a difficult year for everybody. I mean, transaction volume is down 75% across the board, but things are starting to look back up here, and I'm excited to have a potential deal going under contract here any day now in the Kansas City market, and continue to look everywhere within 4 hours of Nashville and other high growth markets with strategic operating partners on a regular basis.
Sure. So tell me, let's talk about the market for a second. You're in the space. You're obviously heavy in the space. What are you seeing for 2024? I'd love to get your opinion. Everybody has such a different opinion. I'd love to hear yours.
Yeah. So my opinion on 2024, I mean, I'm sure there may be specific things that you maybe want to break it down on. I mean, if you want to start with
I
interest.
think more or less in the world of apartments and syndications. What are you seeing in the commercial world with lending and stuff like that?
Yeah, I mean, look, lending is out there. It's obviously vastly improved even over the course of the last month with, the point or so drop that we've seen.
Sure.
But lending's out there. The terms that are being presented to us for the Kansas City deal from a local credit union are incredible. I think most people right now are potentially looking at agency debt, but can be a detriment, to refinance if rates, do really go down quickly. But obviously the lower rates and the fixed rate financing is attractive. It all depends on obviously what your business plan is. But, I guess I do believe we're basically at the birth of a new cycle here in apartments. I do think, there's still some price discovery to be had, but I think it's getting closer to, buyer and seller expectations are getting closer. Sellers are coming to the understanding that if rates are going to settle back in the historical norms of 6%, then there has to be some sort of risk premium above that, meaning, cap rates have to be back above where rates are at in order for you not to be negative levered and for there to be, it's
Right.
at a premium that you can offer to people, right? Now, people might accept it for short terms with the understanding that the property could potentially, you could add value to it for some appreciation, and interest rates might continue to go down. But you certainly don't want to be underwriting for 5+% rent growth. I think rent growth is going to moderate, especially in markets like Nashville, where we're having an incredibly amount of supply. I think some markets like some of the Midwest markets and some markets that are maybe still playing catch up could have, above 3% rent growth. But I think for the foreseeable future, we're going to get much more back to historical norms, not only in terms of interest rate, in terms of cap rates, in terms of return expectations, in terms of deal cycle timelines, meaning, it's no longer going to be 1 year, 2 year, 3 year flips. I think, the traditional apartment timeline was 5 to 7 years, in a worst case, going to 10, maybe based off of different factors as to when you bought it or
Yeah, if you're syndicating, you don't
unforeseen.
want 10 years, but yeah.
Yeah, I mean, again, I mean, I think we're looking at 5 to 7 year timelines. We're looking at, six cap rates. In terms of interest rates, I'm in the camp that I do not foresee six interest rate, what would be,
You don't think it's going to
decreases.
be 6%?
No, I don't think it's going to be six cuts this year, is what
Oh,
I'm saying.
gotcha.
Starting in March, I think it's much more three or four starting in June or July, than it is six. Now, no one knows the truth to that, but and there are some great minds. Peter Linneman was on the other day. He said six. Who am I to argue with him? He knows the economy way better than I do. But then I think it was Zandy was on a Marcus and Millichap thing the other day, and he said three or four. So I'm more in that camp.
Yeah, I agree with you on that too, for sure. So the,
So
the deal you have in Kansas City, are you raising funds for it?
yeah, we're
Currently
still.
raising funds, like right now raising funds.
We're trying to determine it's not a huge raise, 1.3, 1.4 million. So we're reaching out to a few select people to see if we may still do it as a joint venture, but it's looking more likely that it'll go the route of a small syndication, and at which point then we'll have to determine if we want to go B or C
Sure.
on it. So I can't obviously say too much
But
about it
that
here.
small is probably more like a B, I'm assuming.
That would be in theory, that would make the most sense.
Explain to the
But
listeners the difference between a B and C class raise, what that means.
I mean, the big difference is that, a B, you can have non-accredited investors, but you can't market on big platforms, right?
Relationship based
Where
or referral.
Yeah, whereas the C, you have to have all accredited investors, and oh yeah, B, you have to have a pre-existing relationship, right? So that's a very key
Yes.
component. But the accredited and non-accredited can allow you, especially when you're, people are maybe coming from your friends and family members network. They may or may not be accredited, versus if you start to go out to the world, you might get someone who you don't know very well, but is very wealthy and
Yeah.
certainly accredited, right? So that's kind of all out for discussion right now with the other boots on the ground partner I'm working with out there in the
Sure.
Kansas City area. And but in general, for this year, yes, I'm always looking for LP investors, as I continue to work with very well vetted operators in markets such as Denver, Houston, myself in Nashville, potentially partnering up with larger people on in certain instances, and markets like the Carolinas and Atlanta or Louisville or Birmingham, basically, anywhere kind of 4 hours from Nashville.
So how's your model set up? Are you the GP and you have somebody help you with property management? How do you structure that?
Yeah, so I mean, the way we've been doing things right now is yeah, I mean, so on the first deal, myself and one other person were the general partner, and that's sort of how it's shaking out to be. On this next deal, we may have to bring in a few capital raisers just in light of the current environment, and maybe just to try and find a few new partners, so to speak, for long term. Because my hope with this with the partner in Kansas City is that we can find more and more deals. So, getting as strong of a team in place as possible. But yeah, currently, I use third party management. I mean, unless you've really got 500 units or so in a market, it really doesn't make sense to do it yourself. I mean, when I was in Los Angeles, I knew plenty of small syndicators that were managing it themselves, and they
Yeah,
all
I
were like,
would
"Dude, I
not.
hate it. I hate it. I don't make any money on this.
I wouldn't
It's
invest into that if that were me.
yeah, it's all about the control." And like I said, again, especially when you're in a market outside maybe of your backyard, there are specific laws, there are specific trends. They're managing other units in the area, so they know what level you need to rehab to, and all that stuff. So their
Yeah.
services are in value. I much more prefer to asset manage, and from above, because have one of the unique things that I bring to the table is having seen things from the broker side, from the management side, from the on-site management side, from the investor side, having been an LP, and from the syndicator side, having been a GP, and just an owner of personal properties for myself, dealing with management companies. I mean, it's really easy. I know when they're charging excess fees, or with
Oh
the little
yeah.
loopholes they do,
Oh
and all
yeah.
that stuff. And don't get me wrong. I mean, it's never going to be perfect, but certainly having my team is, in essence, obviously, based off of myself and some strategic people at the GP level, and then obviously attorneys, CPAs, and third party property management.
Sure. Yeah. So, an asset manager for the listeners is basically the person who manages the managers, is like how I like to put it. They manage the bookkeeper, they manage the property management, they manage the distributions, they manage the investors' expectations, they manage the business is what they do, and they usually get paid a fee to do that. When the general partner could be the asset manager, or a part of their team could be the asset manager, but the general partner generally is the one who takes on all the risk and the debt and brings the funds to the cash to close and does the raise and stuff like that. Awesome,
Exactly.
man. So tell the listeners what you're working on. I know that you were
Uh,
talking about you're getting ready to start a new company for this syndication project. What is that called, and what is the goal?
Yeah, well, it's the for the past 13 years or so, I've been Brian Heller Real Estate Investment Strategy, and that started off as brokerage, and then grew with my development, and at this point, it's so mishmashed, it's sort of become a digital resume more so than a true website and a brand. So now that I'm really dialing in full time to apartment syndication and capital raising, I'm very close to launching my new brand, Fairway Equities. The website and everything should hopefully be completed within the next few weeks, and I'm really excited about that. I just went to Charlotte to film some content. I've been
Awesome.
doing the podcast tour here to get some great educational content, hopefully to put on there for everyone, and I'm excited to hopefully gear up for call it a deal a quarter or so here in 2024.
Awesome. Are you looking for any partners or any help with the equity company, like employees or capital raisers or anybody to help support?
So right now it's just me at the company. I mean, I think the way that we approach it is more, like I said, on a deal by deal basis, finding strategic partners, and obviously each individual deal, you'd form your own LLC and your own business around that deal. But in regards to sort of the bigger picture of what the business does, I'm looking for, limited partner investors. I'm looking for capital raisers. I'm looking for, deal finders or other operators in other high growth markets that we could hopefully create some synergies with our skill sets, and
Yeah.
create, amazing opportunities for our investors.
Well, how could these investors and people find you?
So I can be reached at Brian at fairwayequities.com. I'm also on LinkedIn and Facebook, basically under my name of Brian Heller, and should have several new pages and stuff here popping up as soon as we get the logos and everything finalized.
Awesome. Well, thanks for being on here. Is there anything that you'd like to share before the end of the show?
Just that I'm really excited about 2024. I think there's going to be a lot of really great opportunities for investment in the multifamily space. And I'm looking forward to working with not only new partners, but new investors, and, creating financial freedom for a lot of people in the near future.
Awesome.